Hello traders, Cousin Vinny coming to you from theclosingprint.com on Sunday, September the 13th, 2015. In this video, we're going to cover the indices which finished the week higher. As you can see, the S&P 500, the 1500 composite, plus 2%. NDX and the comp up by 3% roughly. Russell and the IWM finished up 1.9 and 2%. High-low percent, still on a sell signal, the 1500. Tick-Q, both trending higher. NYSE and NASI for the NYMO and the NYSE for the New York Stock Exchange and the NASDAQ 100. Both crossed last week and moving higher. Breath, we had an MDD to finish the week the previous Friday, not this Friday, which we had a 10-to-1 bearish major distribution day. And then on Tuesday, we had an MAD, a major accumulation day. On Tuesday, we had a 100% major accumulation day. CPC, this past Friday, the high was 1.51. It closed at 1.21, closer to the bullish range. VIX is still elevated at 23.20, and VIX VXV is mid-range, no signal there. Currencies, we had the US dollar lower, the lower end of the sideways range. It closed on the 200 period moving average on Friday. Bonds, TLT, we saw a shooting star on Friday. We commented that on a 30-minute we saw price action move outside the upper Bollinger Band, and we figured the spiders and the S&P 500 would move higher and TLT would move lower. That's exactly what happened. TLT price actions below the 10 EMA and 200 MA, but above the 50 period moving average. Commodities, crude oil is off. This is incorrect. It was down slightly, and copper was higher. Gold at the lower Bollinger Bands, it's less than the 50 period moving average. Sectors, we saw XBI showing relative strength, the biotechs and pharmaceuticals. XLV less so, but still trending higher, with the others showing relative strength, XLK, XLY, consumer discretionary, and transports, which are all very important. Setups, we'll look at the new scan candidates that I posted over on Saturday. We'll review some of those, plus the IBD50 names that made it through the new filter and new scan. Okay, so here is a chart of the daily SPY ETF. The thing we note is we had this waterfall. We hit this low on the 24th, this huge range spinning top, and then the next day we had this very large bar or candle. We built this volume by price, congestion level. Most of this is green up here where price action is. We closed above the 10 EMA on Friday. Thursday and Friday we sent out a game plan which played out, whereby we were looking for this ascending trend line to hold where it held previously, which it did, so that gives us more of a bullish bias going into the week. Price action is right at this volume by price bar, which is about 50-50 bulls and bears. So looking at volume, looking at stochastic, which is moving sideways, MACD histogram, as we made this low, we started to make these pivot lows, higher lows. MACD confirmed by moving higher. We've since crossed the zero line. MACD is crossed below the zero line and is above its signal line, the lighter of the two. Tick cumulative, as we mentioned, continues to grind higher. That's good. That's institutional sentiment. As prices move higher, more buying occurs at the ask when you see plus 1,000, plus 800, and capitulation buying when you see the shorts cover when we have a plus 1,400 or plus 1,300 tick bar. Okay, it just means 1,400 more stocks or 1,000 more stocks are being bought at the ask. So all in all, this chart is looking bullish. Now we do foresee resistance up here. At this green line is the 65 on this particular chart. These are all EMAs, if you see here on the top left. We have a Kirby pocket where less volume traded as this price waterfall down. So therefore, on the move up, see this green bar, if we trade into this 198, 199 level, more likely 1, 2, 3, our fourth test, we'll see prices move up into this level and conceivably could hit 202 before seeing resistance. Then up here at 204, this bar starts, and then 208 is where the larger volume by price resistance levels come in, and levels we traded on these pivot lows in price action. Here's the 60-minute, which shows the ascending triangle more clearly, the higher lows that we keep putting in. We have this level from the 210 down to the recent pivot low at 186.92. This is just eyeballed, but the point is that price action traded up to 382. Consolidated in this range, the moving averages are oscillating. Note the number of candles that are now trading above the 30-period moving average versus below, as we saw back here. So price action is getting more bullish, not less bullish. We have this 50% level up here where price action consolidated, adding Fibonacci's from this pivot low up to the 199 zone. We also noted on Thursday and Friday that we were holding the 382 level when we drew in this line here. So the fact that the pullback held the 382, showing a stronger consolidation each time we pull back as we make higher lows. So this is looking more bullish. We're looking for price action to continue to move higher on Monday, Tuesday, barring any catalysts that'll push things lower. As we mentioned previously, we have XBI, XLV, XLK, XLY, and IYT all showing relative strength. So that should help as a catalyst going into the week ahead. Here's a chart of the NASDAQ daily, NDX 100. This is showing better relative strength. We moved higher. We got above the 10-period EMA quickly and spent the whole week, for the most part, above the 10 EMA. We closed slightly below on Wednesday. Price action, the 10 EMA is crossing up through the 20, the dashed line. Volume looks good. MACD is looking better. It crossed Tuesday earlier in the week. Histogram is moving higher, and slow stow turned as well. We have good signs for the NDX A50R moving off extremely oversold levels on the 24th and trending higher, the number of stocks trading above their 50-period moving average. So the NASDAQ looks good going into the week and is confirming what we're seeing on the SPY. It's actually leading. We do see some resistance overhead. We have the 50 and the 200. Just keep that in mind as prices approach that level. We will reassess the situation and send out a daily game plan. A chart of the Russell 2000 Small Cap Index. Note the previous support here that turned resistance. Price is battling to get back above that level. But we are above the 10 EMA, and the 10 EMA is about to cross through the 20. So we will have a trend change if this keeps up. Slow stow is above 50. MACD is headed higher. Now note MACD will probably cross the zero line before and ahead of the NASDAQ and the spiders respectively. So risk is on for the time being. Prices are moving higher. And here is the New York Stock Exchange Composite 2000 stocks. This is an Elder Impulse system where you see the green, the red, and the blue. Currently we have 4 blue Elder bars. That just means price action is pausing, taking a respite. Although it's trying to move higher, MACD's crossing. And then we have our up-down volume, which showed a MDD the previous Friday. And then on Tuesday, we saw an MAD of 90% to 100%. So that was looking pretty good going into the week as well. So for the most part, the bulls are winning and the bears are refusing to let prices move higher for the time being. Tick cumulative for the New York Stock Exchange Composite crossed over, continues to move higher relative to price action. Breadth is moving higher as well. So that's looking really good for the time being. We also want to take a look at Tick Q for the NASDAQ composite, which is looking good as well. This actually looks slightly better, as we know the NASDAQ and the Russell are leading the S&P 500 currently. Note the green elder bars looking pretty good on tick cumulative for both the NYSE and the NASDAQ. As we watch the NYMO values during the day, we can see that we are positive. NYMO continues to stay above the zero line, which is good. The NYSE, the McClellan Oscillator Summation Index, continues to drift higher. We had a crossover early in the week, so this is bullish as well. If you are a bear, you want to keep an eye on this as well as the bulls. Now if we look at the NASDAQ, we see the same scenario. NASDAQ is stronger, as you would expect. XLK showing relative strength. We have the green elder bars and the NASI, NASI, the summation index for the NASDAQ, gave us a cross and is moving higher as well. The put-call ratio, CPC, is more in the bullish camp, as we mentioned in the opening monologue. 1.51 was the high of the day around the 10 a.m. mark. We closed lower at 1.21, but this is in the green zone, so that's good. More fuel for the fire for the bulls, and a caveat for the bears. And lastly, VIX is still elevated, did close lower. As you can see, this shooting star, gravestone doji, 23.20 we closed on VIX, so we are starting to get back in the range. This is an area where we tend to see a fade, so if you want to have a more bullish stance in this case, VIX VXV, the ratio between the front month and the 3-month volatility index, we're still in the white zone, so we were looking for anything below 90%, preferably down below 85 or 82% to mark a top of the recent move higher. So keep an eye on VIX VXV ratio. The US dollar, for the most part, continues this sideways range, taking these highs and these lows. Starting to move down towards the lower part of the range, although we do see that we stopped at the 200 period moving average, the rising magenta colored line. Prices below the 10 EMA and the 50, but above the 200 period moving average. And here is the Japanese yen, which had quite a move as the S&P 500 and other indices had that dip in late August. The yen rallied, which is actually not that great for the Japanese economy. If you check my stream on Saturday, I posted a great review of the Chinese yuan and what their currencies and what the Bank of China is trying to accomplish is actually backfiring, and how this will play out over the coming weeks if you're concerned about China and devaluing their currency that's pegged to the US dollar, how all that affects each other. Look at my stream on Saturday and check for that link. There's a YouTube video to rt.com, the Boom or Bust series. You can just Google that as well. A very interesting series on the China devaluation. So let's look at the commodities for a minute. This is copper, as we noted last week. The 10 EMA, the 20 EMA are all turning, and price action has made it through the 50-period moving average. The 10 EMA is about to cross this week. Copper is usually a leading indicator for the construction and building industries, being there's so much copper in residential and commercial buildings, water, piping, etc., wiring. So that's a good sign for the economy. MACD's above the zero line, and volume looks pretty decent with those moving averages crossing. Gold is resuming its move lower after the preceding move into the 5200 cross that we saw on the New York Stock Exchange 4 weeks ago, and the Dow Jones Industrials, the S&P 500 cross last week. We're monitoring that situation as well. But gold, as far as a fear indicator, war, all of that sort of thing, safety, gold is starting to resume its move lower. Now note that it had a hammer on Friday, so we keep an eye on that off the lower Bollinger Bands. Here's a chart of WTIC. We note that Goldman Sachs came out with a read on the oil industry and crude in general, with the Iran deal looming and how the supply would affect prices. They're looking at a target of 20. We're currently at 44. They also mentioned in their article the 44 level versus the 60 level, so they've changed their tune. I'm keeping an eye on it. Presently, price action is creating a pennant. If it breaks down below this pennant, we'll probably close all of our remaining positions in UWTI. So if you're trading UWTI, remember we took profits off of they had a 10-for-1 split. The 80-cent level previously, which aligns with the $80 level now, we had prices ran up to the 16 level, or $1.60. We sold the original position, which gave us in effect 100% accumulation, and we left the profits on. The profits have since been moving sideways, consolidating. We have a little doji on Friday. Price action is below the 10 EMA, so keep an eye on UWTI if you still have a position on. We do. We have a trailer, but it's all profit, so we don't want the profit to expire as well. So we'll keep an eye on lows this week. Another pennant pattern on UWTI. Same situation with BTU. The coal space, along with ACI, had a nice move off of this $1.30 level when news came out that George Soros had bought a position at lows, as well as on ACI. So we ran up from $1.30 all the way up to $2.60. We took 100%. Took our original position off the table and kept the profits on. Profits are pulling back. Price action's pulling back. We're below the 10 EMA. If you were in your original position, you should have been stopped in this area right here around 2. If you haven't been, watch for a bounce this week in BTU and ACI. Okay, note the volume, not nearly as strong as the initial buying volume that we experienced when the news about Soros came out. I doubt this is him selling here. Could be just hedge funds trying to make a buck. But we don't know, do we? They're not exactly telling us what's happening. We have to watch price action. We do note the Kirby level here. If price gets above that level, we could see prices resume and start to move higher very quickly. Note the 50-period moving average just below price. If we get down that level and we start to look like we're going to lose the 50-period moving average, we'll take the rest of our position off. More than likely, we'll test that and bounce. The 10 EMA crossed over the 20 and the 50, and that gave us an indication that trend was changing. So although it has pulled back somewhat more than we wanted, we do see or foresee price action resuming or continuing higher. This is a chart of TLT, the 20-year. If you're trading SPY, you want to keep an eye on the NASDAQ because these usually are correlated. When SPY is higher, TLT is usually lower, and vice versa. So if you're bullish SPY, you want to see TLT moving lower. We're currently below the 10 EMA. The 50 is right below price. The 20 is turning over. The 200 is overhead, this purple line. And we have this trend line, if we extend it out, that meets up with the 119.56 level. We're looking for prices to move back down, move through the 50-period moving average and the lower Bollinger Band. If that occurs, that would coincide with SPY moving higher. Note stochastics is moving higher, but price action is not. MACD is now below the zero line, and momentum is decidedly bearish, though it is tapering off somewhat. Let's take a look at the weekly, where we can see that same price action, this descending trend line. We have a dragonfly doji. Last week we had a hanging man at the 20 period, but prices dropped down below the 10 period EMA and the 50, right at the 20 period moving average on the weekly chart. Okay, so let's start off with the IBD50 for September the 12th, the weekend. We have a number of new stocks on the list, some that have come back on the list, namely EPAM. We see Nike is back, Global Payments, GPN, SIG, Signet Jewelers is new, haven't seen that in a while. AOS, I believe this is the second week it's been on. CRS is back. I think it left and came back. Google is back on. PNK is back. Cognizant, CTSH. We have Cirrus Logic as well. I think, where is that? CRUS. We got Starbucks back. So we have a number of new stocks and some of the older stocks that are back. And this is ranked by performance. Where is Cirrus? There it is, Cirrus Logic. Okay, then we went in and filtered the stocks through our new indicator and strength barometer, if you will. Some of the names that popped up were EPAM. We noted this pattern. This new scan and new signal indicator gave us an indication that we had relative strength here. EPAM continued to move higher. Note the volume by price bars. We have a Kirby overhead. This one's probably going to break out this week. If not, it'll form a handle and then possibly move higher. Note the volume. MACD went positive. Nice histogram. So we definitely got momentum here. Slow slow turn and move back up. Maybe it recycles, moves back down to 50. Maybe it embeds. But as far as the IBD50, this one was filtered through the new list and looks pretty good for now. The other names that were on the list were Cirrus Logic. Now if we look at this with the box setup, it's a little clearer. Looks like it's trying to change trend. Note the 10 EMA has just crossed, and we have this nice candle on Friday. Keep an eye on this one this week. We want to see MACD continue to move higher and get back above the zero line, and stochastic turn quickly on Monday. Look for all of the chip stocks and continued strength on XLK. Let's take a look at that real quick. Forgot to cover the sectors, but we'll do that here. Relative strength. Note the upper panel is the XLK to SPX. Continues to climb, so relative strength is eminent. And XLK, XBI, we also saw relative strength. Continues to grind higher. Note the green elder bars. Relatively speaking, if you look at XLF, for example, XLF continues to show weakness, although it is flattening. If you want to see higher prices on SPY and the SP 500, you want to see XLF get in the program as well. XLV also had a nice trend to it, turning. XLE, we mentioned the article by Goldman Sachs. Not making a new low, is drifting a little bit lower. We're watching price action here. Had a little bit of a reversal bar there on Friday on XLE. Consumer discretionary, Yukarowitz pointed this out on his blog, looking very strong. Cars, autos, clothing, shoes, there's where Nike comes in, all looking really good as far as relative strength is concerned. We also saw IYT, which is an indicator of market strength using Dow theory. That's moving higher. We had a nice move in IYT. Let's look at this from a MACD perspective. MACD is about to cross above the zero line. That's good. Stowe's higher. We still have this descending pattern. We want to see prices get back above the 50-period moving average, the blue line. So this is a first test on Thursday. Note that. Reversal doesn't mean we can't move higher. There will be some resistance up here, but for the most part, these sectors are looking pretty bullish. Let's get back to the IBD50. LCI, Lynette Company, also met the criteria for our new scanner. Note the relative strength, the 10 EMA crossover of the 30. That's a bullish sign. Prices should continue to move higher and then occasionally move back to the 10 EMA, the zone between the 10 EMA and the 30, as long as the 10 is above the 30. Then you have bullish trades, and here we were short. The 10 EMA was below the 30. So keep an eye on that. Note the volume, very suspect. We anticipate to see a move higher. 6-7 million shares traded the previous week, and then we had this gap up. Gap and go. If you have read our book, you know the gap and go should continue to move higher. We did dip down a little bit below this opening candle, gap higher, closed lower. The next day it came back down to the 10 EMA, but now it's resuming higher. So I would suspect or anticipate that LCI will continue to move higher on the gap and go. Papa John's also showed up on the scan when we filtered it through the new scanner. We have a descending pattern here. Let's go to a box trade setup. It's easier to read. There you go. Now, this will probably cross in the next few days. The scanner showed this particular signal probably occurring midweek. I would expect that the 10 EMA is going to cross at some point. Price action continues to move higher. MACD is moving higher. This is more of an aggressive trade. Note the histogram. Slow still needs to turn back up. We want to see increased volume. But Papa John's looks like it's turning. If we look at Domino's, let's see, Domino's. What is Domino's? Domino's TBZ. I knew that. Let's look at that through the same screen. Alright, so we're seeing a little bit more strong action here. The 10 EMA is probably going to cross back up. Descending pattern. Take out these highs here. That looks good. MACD is turning. Not back above the zero line, so this is more aggressive trade. But histogram is noting the change in momentum. ALMN Alumina also showed up in the scan. Note where it's picking up. The 10 EMA is about to change trend. Possibly cross back above the 30. Got the MACD turning. Nice volume. Slow still in the overbought range. And this nice Kirby on alumina. Watch for these highs to be taken out at around 216 and 220 in the near future. It's probably going to get into this Kirby even further, and we'll start to see resistance right here around 213 even. So keep an eye on alumina. Let's look at some of the other stocks. You can go back and scroll through the list of IBD stocks, IBD50, and do some of your own charting. Alright, so just keep an eye on these. Here's the first group. You can pause this, and then the second or last part of the group. Note Foot Locker. We had Nike on here too. Let's see what that discretionary. Look at it's trying to get back above the 50 period. And we got the 30. Looks like it's trying to change trend. Nice little wedge pattern there. Triangle pattern on Nike. AERI, Aerie Pharmaceuticals. We noted this one as well on the new scanner. These popped up. Note the 10 EMA crossing back. It looks like it's going to try to conquer this gap area here. Looking for volume, MACD to get back above the 0 line. Fold was another name that popped up on the scan. We note that Greg Harmon also had a post this weekend. These bear flags stop breaking down, like the one here, and instead turn back up. So we're noting the same strength that he's seeing from a different perspective. Bounced right here at this volume by price bar. 10 EMA is turning back up. We're more than likely going to break out this week on FOLD. Note the MACD is above the 0 line. ECA in Canacorp, probably one of the better setups this week. Note the downtrend. The 10 EMA is crossing. That's becoming bullish. We got this big Kirby up here. If price action gets up there, it's probably going to get sucked into that level. Has yet to test it once. Got close to 745. But note the volume. This is the thing that we've really stuck out. MACD is continuing to move higher. Not above the 0 line yet, so this is more of an aggressive trade for a follow-through. Possibly some resistance here before it resumes into the Kirby. But that would be quite nice, though, is turning back up as well. So this one's looking pretty good. ECA. GMCR, Keurig, Green Mountain, also showed up on the scan. Note it's inside the Kirby already. Note the green bar here. 10 EMA cross. We have a descending pattern. More than likely this is going to continue higher up to the 71, 72 level. Possibly 68. See a little bit of resistance inside this Kirby. Note the volume. MACD is turning very sharply, almost above the 0 line. So GMCR looks pretty decent this week. Perhaps if you're lucky, we get a little pullback to the 10 EMA, it holds, and then price action can reverse. You can get in at that point. Rovi, same scan. Criteria picked up on this inverted head and shoulders pattern. Note the Kirby ceiling up here. Prices could move higher. The trend line in between. The 10 EMA, 30 EMA cross. We got volume. MACD continues to move higher. This one looks like it's going to reverse and continue to move higher. SGMO, another Sangamo Biosciences, testing this upper trend line. Note this huge volume bar, 7-8 million shares traded on Thursday. If prices get above this level, we could see a little pop to 10-11 before seeing some resistance. MACD is still below the 0 line and trying to turn higher. SUPN, Supernus Pharmaceuticals, nice wedge pattern, held the volume by price bands. Looks like it's going to pop into this week. Virtually no overhead supply if it gets above this level at 20. I think that's probably in the cards. Look at the volume. MACD went positive and slow still's turning back up. We probably won't get a chance to trade this. But if we do at the open and it's right around $20, 21, 20, 20, 25, 20, 50, maybe we enter with a little bit of risk. If it drops back down below 10, that would be our stop on SUPN. Okay, that's going to do it for me for today. If you are a new follower, you might want to check out the blog where we post our trades for the day and our thoughts for the week. Most of our charts are plotted here as well. I just published a book, a PDF version, which is available. It's $24.95, I believe. It's something that every new trader could use. If I had this book when I was a new trader, I could have alleviated a lot of errors and problems and lost capital had I just had this $25 book. This is from a different perspective. It's more of a mentoring type. I'm looking over your shoulder. I'm telling you how to trade, what to look at, what strategies to use, not another technical analysis handbook. Okay, so check that out. Also check out the blog posts. We talk about each day what we're looking for going into the weeks ahead, the Friday blog post, just note theclosingprint.com/CV_blog. This is case sensitive, this part. You don't have to put this part in. And I'll also put it in the comment section of this video. Okay, that's going to do it for me for today. I want to get outside, cut the grass, and spend some time outside with the kids. This is Cousin Vinny coming to you from theclosingprint.com. Well, that's one other thing. I redesigned the website. Still have a little bit of work to do, but if you want to check it out, this is the new interface, the new look. Nice and clean, more of an Apple feel to it, and a lot more user-friendly. I don't like the dark look anymore. A lot of the strategies need to be updated, so those are in the book now. I'm creating some videos as we speak for the strategy section that we have in our book. Take care. We'll talk to you on Monday.